Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a look at the technical levels for the major currency pairs for the week starting February 16th, 2015. I'm going to start by taking a look at the euro versus the US dollar. And what we've seen over the last few weeks is lots of up and down activity. These are the types of markets that you want to fall in like with. You don't want to fall in love with them. By that I mean it's trade extremes. If the market goes lower, you want to buy support. If the market goes higher, you want to look for selling resistance on these. Why? Because the market's unsure. The market's unsure of the directional bias. A week ago at this time, we were looking to stay below the 200-hour moving average. We couldn't do that. We couldn't get below this area right here, and so the sellers became buyers through here and forced the market back above the 200-hour moving average. So if I were to put a line in the sand this week, it would be right here at the 200-hour moving average. It currently comes in at 113.72. Stay above it, it's more bullish. Move below it, it'd be more bearish. But each of those steps, either to the upside or to the downside, is going to be lots of different resistance and support levels along the way. It's just the way the market is. So if we do move to the upside, we've got to get above the 61.8% retracement, and also that level also corresponds with this area right here where we had this swing low right here. The market moved back to the upside from there. That's going to be a key level. We're going to have the 114.98 level. Let's call it 115 level. We have the 115.33 level. That's our lows through here and high through here. We're going to have the 116.39 level. That 116.39 level on the top side, that corresponds with the low price going back to 2005. So keep that level in mind, 116.39 right there. So those are the steps to the upside for if the bias can remain above the 200-hour moving average. If we fall back below that level, we're going to get below the 100-hour moving average, and we're going to look for the 38.2, and we're going to start to pick away our lows through here. This area right here where we couldn't get below last week at 112.61 to 77 level, that's going to be a key level to get below on the downside in order to push this market further in that directional bias. So that's how I see the euro versus US dollar. More bullish here this week. We couldn't hold, we couldn't stay below the resistance level last week, so we turned the bias back to the upside. We'll see if we can keep that bias going in that direction. The dollar versus yen, we are also in between a support and resistance here. On the top side, we have resistance against the 100-hour moving average. That's a blue line of the chart. On the downside, we have a support against the 200-hour moving average. Now, in the first few minutes of trading here today, we did move below the 200-hour moving average, but we have these other levels to get through. 61.8% retracement, our lows from earlier in the week, our low here, our low here. All these levels come into play here around the 118.40 level down to 118.34 or 35. That's or 32, I should say. So 32 to 42 is going to be a level area that we need to get below in order to push this market further to the downside. On the top side, get above the 50% retracement, get above the 100-hour moving average, and we open the door to the upside for the dollar versus yen. Let's take a look at the sterling versus US dollar. This currency pair I'm going to start on the daily chart because we made a big break above the trend line right here. It also went above the 50% retracement. This is a longer-term move up from, I think, 2002 lows to the 2014 highs. So that's a key level to stay above, and right now we are staying above, keep the bullish bias here for the sterling versus US dollar. Off the hourly chart, levels that you're going to be concerned with on the downside probably include this high right here, which comes in around the 153.50 level. Stay above that level, the bulls remain in control. Also on the top side, we need to get above this trend line right here. That level currently comes in around the 154.41 level. If we get above that, we want to look for momentum and for the market to stay above that level, okay? That's for the sterling versus US dollar. The dollar versus Swiss, what can I say except on the daily chart, we are trying to stay above the 200-day moving average. That comes in at the 93.018 level. Let's call it 93.02 in trading here today. Here's that line right here, here for that 200-day moving average, and it's moving up a little bit. We are staying above the 100-hour moving average here, aren't we? We found support here, and here against that level. So in trading this week, as long as we can stay above the 100-hour moving average, the bias remains to the upside. If we move back below it, and then below the 200-hour moving average, our green line of the chart, things will be looking more bearish as we head below the 200-day, 100-hour, 200-hour moving average. Those would be the progressions to the downside. Right now, bias remains to the upside for the dollar versus Swiss. Look for higher levels in that currency pair. Dollar versus Canada. So oil prices moved to the upside, and with it came the fall in the dollar versus Canada. The Canadian dollar got stronger as a result. Now, in the process, we fell below this trend line. We fell below the 100 and 200-hour moving average. And in Friday's trade, the market went above the 200-hour moving average, but couldn't get above the 100-hour moving average. Better manufacturing sales data forced the market to the downside, but we have a lot of different support bars down here where we're going to need to get and stay below. And so watch around the 124.27 level. Watch around the 123.93 level. Watch around the 123.77 level, 123.50 level on the downside. All those are going to be tough nuts to crack on the downside, especially given the concern about the interest rates in Canada, also the price of oil in Canada as well, or price of oil also a negative for the Canadian dollar. We are, again, seeing a rebound in oil prices, although inventories still remain kind of elevated, so it may just be a corrective move for oil. Taking a look at the Aussie versus US dollar on the hourly chart, we are in between the 100 and 200-hour moving average and hanging around the 50% retracement of this move to the downside right here. Lots of up and down activity in this currency pair as well, and you can see that on the daily chart as the market consolidates over the month of end of January, early into February. Not really knowing which way it wants to go. What we did know through here on the daily chart is the market did find support against that level, and this low that we saw in last week's trading basically against that low going back there. So that's going to be a level to get through on the downside if we're going to go lower. First level to get through on the downside, however, is the 100-hour moving average. On Friday afternoon trading, we came down to it but couldn't get below that level. And currently we're trading in between the two goalposts, right around the 50% retracement. Goalposts defined by the 200 and the 100-hour moving average. Get above the 200-hour moving average, more bullish to the upside. Move below the 100-hour moving average, more bearish to the downside for that currency pair. It's one of those in between, trying to figure out which way it wants to go. The New Zealand versus US dollar is trying to keep a bullish bias here. Again, on Friday for this currency pair, held above the 100-hour moving average. It's more bullish, opening up a little bit higher. Need to get above the 50% retracement. What was good in last week's trading, or at least on Thursday and Friday, was the ability to get above the 38.2% retracement. And then we couldn't sustain that rally, but we did find support against the 100-hour moving average. So instead of going up to the 38 and falling down below the 100-hour moving average like we did here, we found support against that level that might be a little bit more bullish for the New Zealand versus US dollar. So there you have it, a look at some of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.